these are some of the common concepts that you hear, right? So I'm going to be starting off by going over common concepts. And so sweeps of liquidity, we've all heard this concept, right? Market structure shifts, so breaks of structure, candle breaks above. People use market structure shifts either to look at highs and lows, or they use it for their levels, right? Either or, incorrect. Fair value gaps and inverse fair value gaps, support and resistance, which we're going to talk about a lot in this video, and then trend lines. And so what I often say with each of these, there is a fundamental flawed thinking when it comes to using these, right? So with liquidity, liquidity exists everywhere in the market. And so by definition, if you are looking for liquidity, liquidity could exist everywhere. And right now, markets are generating liquidity across Forex, commodities, futures, just about anything. The markets are constantly generating liquidity. So a sweep of liquidity is like looking for a grain of sand at the beach, right? It exists everywhere. So when things exist everywhere, the value of them goes down. And so that translates into your entry model. You want to add things into your system, or you want to add things into your arsenal. You want to add things into your process that has value. Now, if liquidity exists everywhere, there is an oversupply of something. So the price of that will fall theoretically. And what's really going on is, if you're looking for sweeps of liquidity, that is not viable. Same thing with market structure shifts, because by definition, you're waiting for a high or low to be broken. Now, the problem with that is that highs and lows are broken everywhere because highs and lows are made everywhere. So sweeps are probably the worst. Market structure shifts are not far off. Same thing with fair value gaps and inverse fair value gaps, right? They exist everywhere. And so it's very much a saturated market, meaning they exist everywhere. And so their value to entry, or value for entry, is low. What I mean by value for entry is that when you're going to enter the markets, you need to make sure that the system you followed is actually valuable. So I'm just going to be going over what that means. Now, we're going to skip support and resistance for a second, but trend lines, I hope nobody here is drawing them to try and trade, or even trying to, because I can draw a 68-degree trend line, and someone else can draw a 62-degree trend line, and someone can draw a 58-degree trend line. And so I just want you to move away from all of these. Now, when it comes to support and resistance is the most interesting topic, because support and resistance is basically how the markets work, or how I like to say demand and supply, or supply and demand, right? A resistance area is really a supply in the market, and a support area is really a demand in the market. And so what you see at the top is an area of resistance, and what you see at the bottom is an area of demand. So hopefully people can see, because you've all had some basic order flow training by now, I think, right? Most of you have. So what you see here is a lot of aggressive buying, and that's where the execution happens, right? This particular day, 7 contracts on MES over here. Now, the aggressive buy orders fail, which creates an oversupply in the market, which then creates resistance. So you want to short. Support is creating the opposite way, where we see aggressive sellers, aggressive sellers, aggressive sellers. We see a lot of aggressive sellers in the market, but they were unable to break below their zone. And so that means that the market is supporting buyers, or there's passive buyers present in the market. And so when I title this presentation as Change Your Mind Forever, I want you to move away from drawing things and putting your own kind of perspective on the market. Instead of looking for key levels and trying to make your own bounce or theory off them, you want to let the market tell you what it wants to do and just follow that. It's a bit of a